Hello and welcome to Dollars and Cents, the Australia Institute podcast where we're talking about just what the hell is going on in the economy. I'm Elinor Johnston-Leake, the senior content producer here at the Australia Institute, and as always, and for the first time back this year, I'm talking to our chief economist, Greg Jericho. Hello, Greg.
Hi, Elinor. We're back.
We're back.
How
were your holidays?
Good. I didn't have very long because as listeners know, I took a big long break last year, and so I didn't have any. Actually, I didn't have any holidays. But we're back. 2026.
Yeah.
Can you believe it? 26.
You got any New Year's resolutions?
No.
That's probably for the best.
I'm not I've never been a New Year's resolution guy, and I've never really been a New Year's Eve go out and have fun guy.
No. Just to stay at home.
Not since I was young and did it once and got extremely drunk and ended up in emergency getting stitches in my hand because I broke a beer bottle on it. I don't know where we're going with this.
Sounds like it could have gone a lot worse.
Could have gone a lot. And since then, I'm like, no, New Year's Eve.
Not your thing.
Not my thing. Let's just pretend it's just another day.
Let's just sit inside and talk about economics.
Yeah, that's yeah.
That's your favorite thing to do. Yeah. Well, today we're talking about one of Australia's pet peeves, or really one of our, generational massive problems, the housing market. We've talked a lot about it. It's very cooked, I think is the word. But how does Australia actually compare to the rest of the world when it comes to the housing market? Are we just, complaining a lot, or, are things getting expensive everywhere?
We have a right to whinge.
That is true, actually. But
or more specifically, you have a right to whinge because, of course, you are in the cursed generation that failed to be born at the right time. And so
doesn't yet own my own
home. Due to
home.
your negligence of forethought in getting born in the early 70s, you missed out on being able to get into the housing market at the right time. No.
That's my mistake.
Just in the past week or so, the OECD did its sort of annual, let's have a look at Australia survey.
Yep.
And
see what's happening down under.
And it particularly had a look at housing and says, Australia, you be cooked.
Well, it's nice to get a second opinion.
Yeah, I mean, comparing us to the rest of the OECD, which is all the advanced economies, our housing prices relative to our incomes have risen much more than others. There are a couple others who have kind of sort of kept up with us a bit. The UK is a bit high. Canada is sort of around our mark. But America, well below us. Most of the European nations, well below us in terms of increases in prices. And Australia really, unlike everyone else, really took off in the early 2000s, as we've pointed out many, many times before, just after John Howard decided to change how capital gains tax was dealt with.
Bloody Howard.
Bloody Howard. New year, but no change in our blaming Howard for everything wrong in Australia. Really, the OECD just looked at this and said, you got to fix things because if you keep doing what you're doing, it's only going to get worse.
In terms of, to keep on doing what we're doing, what is it that we're doing that other countries aren't?
Yeah, a couple things. We don't have much social housing.
Yeah.
Compared, and we're talking specifically here sort of available for rent, compared to a lot of other nations or compared to the OECD, we're well below average. So we should be having much more public housing, social housing. As I've pointed out in the past, we used to build a lot more public housing back in the 60s, 50s, very much so the 60s, even into the 70s, which is why when Anthony Albanese talks about, he grew up in public housing, well, there was a lot more public housing around then.
Do you have any numbers to compare?
Yeah, I mean, like back in the 50s and 60s, for every 100,000 Australians, we used to build about 150 public sector residential buildings, whether it be homes, whether it be houses or apartments or things like that. So about 140 to 150 per 100,000, which doesn't sound like a lot, but not everyone of those 100,000 is looking for a home at that particular time. And this is new buildings.
Yeah.
So that was around 140, 150. pretty much for the last 25 years, it has been under 20.
Yeah, okay. So a significant drop.
A significant drop, and a significant drop that has kept going for 25 years. So you think about, let's say if you're aiming for 140 per 100,000 and in 1 year you do 20, well, okay, we've got a gap to fill up. We've got to do some more. But then we did it for 2 years and 3 years and then 4 years. So now we've got basically a quarter of a century's worth of deficit. We've got to somehow build that back up again. So the OECD point out, build some bloody public sector housing.
Yeah.
But the big thing that they also talked about was tax.
Yeah. Tax concessions that we give to majority wealthy people.
Yeah, it's the tax concessions for investors, housing investors. So the capital gains tax, 50% discount.
Yep.
So you buy a house for $400,000, sell it for $800,000. You think, oh, I've made $400,000 in profit. That's income. I'm going to have to pay tax on that. No, you only pay tax on $200,000. We'll give you the other $200,000 tax free. $200,000 tax free threshold.
Do other countries not do this?
No, they don't. We seem to like doing it more than others, and also negative gearing as well is a thing that we do that others don't. Others do have similar types of things, but you can only, like, if you make a loss in your rental, you can count that against your income from your rental. But in Australia, we're like, no, you can take that away from your teacher's salary or your doctor's salary or whatever other income. So they said, look, they're the two things you really got to fix: capital gains tax, negative gearing, and that public sector housing. And it's really interesting because, of course, we have been banging on about this for a very long time. The OECD, just remember who runs the OECD.
Just remind us.
Matthias Cormann.
And the problem that the Labour Party has today is that Bill Shorten is an economic girly man. He doesn't have what it takes to repair the budget mess that they have left behind.
He was the finance minister with Joe Hockey when they did the big austerity budget and were sitting outside smoking their cigars and feeling very flush with themselves.
What an image. Yep.
This is not a left-wing organisation. The OECD is pretty conservative. It always wants governments to cut back on spending and everything. But actually, when it was looking at Australia, it was sort of saying rein in spending a little bit, but it was really saying fix your tax base. You've got too many exemptions, you've got too many discounts, and in terms of capital gains tax, discounts that are skewing the housing market so that Elinor can't buy a home.
Yep, that's exactly what they said, yes.
Yeah, and it's not just the OECD. There's currently a government inquiry into capital gains tax and the impact it's having. The New South Wales Treasury Department put in a submission saying as well, capital gains tax discount, we got to fix it. It's wrong.
Yep.
People often talk about, things like the Overton window where you kind of shifting what is viewed as permissible or normal or accepted.
In terms of ideology.
Yeah, and so there's often talk about, the way in which the right wing and the far right talk about demonizing of, say, migrants, or they talk about how they demonize unemployed people, how, back 30 years ago, yes, unemployed were not praised and everything, but there's been 30 years of calling them dole bludgers. And so it shifts everyone from thinking, unemployed people who should, be able to at least live out of poverty to actually know they shouldn't get paid much at all or, get anything. And so it's this trying to shift how people think about things. And it's often talked about with the right wing and doing it for ill. But one of the interesting things on things like tax, on things to do with housing, yes, we have been pushing it, trying to say, hey, the capital gains tax discount is terrible. It is doing things bad. And when we were first doing it, there was this sort of sense of, God, these left-wing socialists, blah, blah.
Yeah.
But the reality is now you've got organisations like the OECD, like the New South Wales Treasury Department. You're seeing some more centrist sort of think tanks around saying, look, the capital gains tax discount is just bad. It is, we're talking $21 billion in tax foregone, 80% of that, so around sort of $18 billion or so going to the richest 10%.
And it's destroying the housing market.
The housing market.
Yep.
People are kind of have moved there. Something that 15 years ago would have been like, oh, don't touch that. It's to a point now where I think if the government was to look at it, I think there is much more of a view that people go, yeah, actually, that's sensible. That's a smart policy rather than, oh, that seems a bit extreme.
Yeah.
And this is the thing with what we do. We try and push these things not because we're extremists, but actually because we think these are the sensible policies. These are policies that will be fair, that will help things. And sometimes we're out on our own doing that. Sometimes when we were pushing for superannuation changes, we were kind of out on our own. Ironically, OECD as well in this report saying, hey, those superannuation tax breaks, maybe fix those as well.
We're definitely not alone in this one.
Yeah, so it's why we push forward policies. We don't push forward politicians or political parties, because political parties sometimes need to be held their hands so they can cross the street and go, come on, cross the street. It's okay.
It's okay. No one's going to laugh at you.
Yeah,
you can cross
safe
the street
now.
Please, everyone wants you to. Please do it. Yeah.
And I think the capital gains tax is a big one, where people are like, there's been a real shift in the economics world, and I think in the public sort of consciousness, and now it's just, can we get the politicians to realise, oh, it's not 2000 anymore, it's 2026. We've had 26 years of this. It's stuffed everything. Let's fix it.
Very well said, Greg. Moving on to another one of your personal pet topics. We've got new inflation figures out this week, Greg. First of the year.
Well, the exchange rate popped above 70 US cents this morning when the ABS released a December consumer price index that was higher than both the market and the Reserve Bank had forecast.
The fate of mortgage holders dreading an interest rate hike now in the hands of the Reserve Bank.
We understand and we recognise that Australians are still under pressure. We can see that in these numbers today, despite all of the progress that we've made in recent years.
Inflation's gone up to 3.8%. Greg, was that just, everyone spending a whole bunch of money over the holidays, or is something else going on here?
Well, it certainly had to do with the holidays.
Yeah.
These were a bit of a shock. No, I won't say no one, but most economists were thinking that they would stay relatively stable, around 3.4%. Remember as well, the Reserve Bank would like it to be under 3%. So going from 3.4 to 3.8 got everyone going, oh, God, here we go.
Yep.
Interest rates are going to go up next week, and they probably will. But when you look at the figures, when you go, okay, well, why did it go from 3.4 to 3.8? There were essentially two reasons, and that was the increase in the prices of international holiday travel.
Makes sense, yep.
And domestic holiday travel.
That also makes sense.
If you take away those two items, inflation didn't go up at all in the month of December.
Okay.
So if you look at the overall figures, inflation, the CPI in the month of December went up 1%. So a big jump in prices.
Yeah.
1 month they went up 1%. But if you take away holiday travel and accommodation, it went up 0%.
All right.
It was completely flat.
Yeah.
So
if I remember correctly, last time we talked, before the RBA met, after the RBA met, Michelle Bullock said,
we didn't consider the case for a rate cut at all. We didn't explicitly consider the case for a rate rise at this meeting.
Do we think that they're going to look at this inflation figure as it is and increase them, or maybe look at things a bit more closely?
There's certainly no cut on the cards.
No.
The market is suggesting, again, are all the speculators all betting essentially what the Reserve Bank's doing. They're pricing in at about a 65% chance that there's going to be an increase.
Yeah.
Now, there's two reasons for that. The big jump in speculators predicting that there was going to be a rate rise was when we had the unemployment figures for December come out showing that unemployment fell to 4.1%.
Yeah.
And everyone got in tears because, unemployment's down. The Reserve Bank will hate that. They want to get unemployment up. And so there's going to be a rate rise. And remember, the reason why they think that is because the RBA operates under this belief that if there's low unemployment, then wages will go up. If wages go up, then inflation will follow because everyone's flush with cash, flush with more cash, and also businesses like, we got to raise prices to help cover the wages.
So we need more people to lose their job. Yes.
Yeah. The thing is, though, that 4.1% figure while it's good, I always think lower unemployment is good. It looks a little bit like an aberration. Looks probably like, the figures will have a big drop in December and then probably January they'll probably bounce back up again, and it's all a bit of a statistical mirage. One of the reasons for that is you look at other things like the number of job ads. The number of job ads is falling. The number of unemployed per job vacancy is rising. So it doesn't seem like, there's lots of work out there. It seems actually the opposite.
Yeah.
And it doesn't seem like the situation is, everyone's asking for higher wages. In fact, wages growth is slowing. So that doesn't really compute with those unemployment figures. But the market will like, low unemployment, the Reserve Bank's going to raise interest rates.
Yeah.
And then when these inflation figures came out, they're like, that confirms it. Now, I don't know. Obviously, if you're betting, the smart money, so to speak, is on there being a rate rise. But if I was on the Reserve Bank board, I'd say don't. I think these inflation figures, while inflation's not going down, once you take out those erratic things like holidays, also when you take out the impact of electricity prices, which in two cities, Brisbane and Perth, rose dramatically, but that's purely because of the state's energy subsidies coming on when the interaction of that, nothing really to do with the actual prices. Once you take all those things out, inflation, it's not going up. Okay, it's not coming down at a great rate of knots, but there's no sense that it is out of control. And I don't know why the Reserve Bank is so desperate to smash people, but they are, and I think that's why most speculators are betting that there is going to be a rate rise next week.
On a related note, the Australian dollar has gone up to the highest it's been since February 2023. What's going on there? What's been pushing it up?
Yeah, that's again interest rate speculation because the Australian dollar is today trading around 70 US cents, whereas for the last year or so it's been closer to 65, 66 US cents. What happens is when investors and speculators think that the Reserve Bank is going to raise interest rates, that means that if you've got money deposited somewhere here in Australia, your interest rates are going to go up.
Yep.
So you're going to get a better return on your money. So if you're an investor overseas and you're looking around going, geez, where's a good place to put some money? Australia's probably going to raise interest rates. Let me buy some Australian bonds. Let me even deposit money in something in an Australian bank. Well, to do that, you actually need Australian dollars.
Yep.
And so what happens is you've got more people demanding Australian dollars. There's more demand for Australian dollars. And just like if you're at an auction for a house and you suddenly got more people bidding for that house, well, the price goes up. Same thing with people are bidding for Australian dollars. There's only a finite number of Australian dollars out there. They want to get them, so they become more valuable, and so they go up in price. So all that's happening is all these massive investors betting that interest rates are going to go up, and that's caused the Australian dollar go up. There's also a little bit with the American dollar being weak because Donald Trump's a complete nut.
Yeah.
And people wanting to get out of American dollars. So it's that interaction. Ironically, though, people are trying to get Australian dollars because they think interest rates are going to go up because they think inflation is rising. If the value of the Australian dollar goes up, that makes buying things from overseas cheaper, which helps reduce inflation. So it sort of has there's a lot of weird things going on here. So basically it's a case that your overseas holiday is now cheaper now than it was 6 months ago, which great news for me who went on a holiday overseas 6 months ago. But also buying stuff from overseas, if you're, it's cheaper now than it was if you were buying it just before Christmas. So it's kind of a weird interaction there.
Yeah, some silver lining, I guess. Yeah. All right. Well, we've probably got a little bit of time here at the end, Greg, for you to have a little bit of a rant. And I did notice that you wrote a column for The Point this week about AUKUS. You seem to have a few thoughts. Did you want to have the floor?
Yeah, I kind of, as they say, lost my shit.
Yes, they do say that.
Basically, where I was approaching it from was there's always all this talk about, we want to be good economic managers. And Labor are saying, we're the best economic managers. And Liberal are like, well, we're the best. And I'm like, have either of you guys looked at AUKUS? Because that's crap economic management.
The total cost was what, 300 billion?
Yeah, about 368 billion is about the total cost. But, we're sending around $5 billion to the UK over the next 10 years just to get them to try and beef up their capacity to build nuclear reactors so that they can put them in the subs that they are hoping one day to design and possibly build for us. Which there are, let's just say, experts over in the UK in defence, people who are retired admirals and then going, yeah, we can't do this. What are you guys, nuts? And then we're also ending, and, at the end of last year, Penny Wong and Richard Marles were over there with Marco Rubio and Pete Hegseth over in the US. Handing over nearly $1 billion to help improve the US shipyards so that they can build enough subs so that they can give us a couple or sell us a few.
If they feel like it.
Yeah, if they feel like it and if they have extra capacity. And the thing is, they don't have extra capacity. Then no way are they going to have enough to give us any, and yet we're giving them billions. And if they choose not to give us any, we don't get that money back. And so basically we've signed up to this thing that Scott Morrison thought was going to be brilliant. We had Anthony Albanese decide to agree with him, and Richard Marles go even further and think it's just amazing. And we've got so many shared values with America, which is pretty stunning when you see what's happening in America.
Less and less true, yes.
And yet it's all based on this thing of we'll pay this money in the hope that we might get something, but actually neither the UK nor the US need to give us anything. And if they don't, we be stuffed.
Yeah, not very sound economic decision by us.
And we had to first do this by cancelling our contract with France. That cost nearly $1 billion to get out of that contract.
Yep.
And we were going to get some what they call Barracuda class submarines. And the news out in the past few months is that France's Barracuda construction is ahead of schedule, a year ahead of schedule. So we went from choosing something that is doing well to paying money for something we're not going to get. And I'm like, yeah, we always talk about economic management and as though that is some great thing. And I'm like, AUKUS just shows it's a load of crap. And it's so annoying. And especially, and if you listen to the Follow the Money podcast that was out this week, I was there speaking with Emma Shortis. Emma and I were on it talking all about what the hell is going on over in America and how it's affecting Australia, both defense-wise and economics. So tune into that one. But yeah, it's just we got all these terrible things happening, and yet we are like, yeah, let's align ourselves with them, and also let's trust Donald Trump and any future American government to deliver something that is based on a promise.
Yep.
And
it's the biggest transfer of Australian sovereign wealth in our history.
Yeah, and also our sovereign defence, because they can do whatever they want with the subs. Even if we got them, they can say, yeah, we need them back. And we're like, okay. Yep. So, yeah. So I had a rant. So have a read of it on the point.
Rant over.
thepoint.com.au. And see if you get as angry as I am about it all.
Yeah. Well, I'll probably have to cut you off there, Greg. I think that's enough of a rant for today.
Yeah, too many rants is never enough, but it is today. But thank you, everyone. We're back. Thank you, everyone, for coming back and listening to Elinor and I. That's it for Dollars and Cents this week, but we will be back with another one next week. No more breaks, at least until December.
Oh, I'm going away soon.
But going away?
Yeah.
God, people go on holidays. I just don't know. Next week, of course, we're going to be talking, obviously, interest rates because on Tuesday, the Reserve Bank will make its decision. We also got Parliament back, so there'll be lots of stuff going on to chat about. But this episode of Dollars and Cents was recorded on the 29th of January, and some things may have changed. If you want to read about what the heck is going on with inflation and all the graphs and all the numbers, you can check out my column on the Guardian Australian site. If you want to read my rants on AUKUS and also what the OECD was saying about Australia's disgusting housing market, check it out and all the other amazing content that we have on thepoint.com.au. There is just stonks of stuff there. It really is good. Also has our weekly quiz.
Oh, yeah.
But check that all out on thepoint.com.au. As always, our music is from Blue Dot Sessions. Everyone, have a great week, and we will see you all next week.
See ya.